Ladies and gentlemen, I'm going to drop you a bombshell after looking through many emails and messages that comes to me. My conclusion is this: many investors should not touch the stock market at all. If not, you're going to get burned. Let's watch on and see whether you belong to one of them and what is the course of action that you should take. Let's watch on, shall we? So the title of my talk today is Many of Us Should Not Touch the Stock Investment. Now, this comes in the backdrop of a lot of uh, people asking me questions, asking me about their situation. And when I look at all this situation, wow, I think that staying put where they are and doing nothing, okay, away from the stock market, I think will beat doing something stupid in the stock market. So now, why is this talk happening right now? Well, it's because the stock market is still on a non-stop rise. Global markets, whether it be Singapore, be it be US, be it be across the world, Japan, Korea, Europe, whatsoever, they're all going up. And just there's just a lot of greed coming in. And I think a lot of people right now have tasted some fruits of success in the stock market, making maybe 5%, 10%, and they felt that this could go on forever. Now, let me just say, a lot of people are now, going for big returns, right? Wow, in 1 month I make 5%, 10%, 15%. And they look at Temasek and GIC and just say, wow, GIC, you're making only above inflation rate of 3.8%. So that's about 5-ish percent. And Temasek makes a return rate of 8% on USD. So you say, wow, that sucks, man. I think I can beat them easily. Well, today's discussion is not whether you can beat them. Today's discussion is about when you make such a comment, it simply also spells that, wow, you're getting really overconfident and complacent. So the real problem isn't about returns. The real problem that I see is about behavior. Right now, a lot of people just go in, buy, make some money, and cash out, take some profits, and be happy. And then they jump in, they go out, they jump in, they go out. Or some people just say, see, I bought this 6 months ago, 3 months ago, 1 year ago, making so much money right now. And, I think I'm going to make a lot of money. Well, a lot of them are also saying that, wow, DBS, I invested in DBS, OCBC. Look at it right now, yielding so much returns, and this can last me forever. Are you sure, guys? This simply spells that you have got no investment strategy. You basically have a few lucky picks, okay? And so far, you're just on a whole market bull run. And there are no downside plan. They are not prepared that there could be a time where market could go down and go down really fierce. Are you ready for it? And most of the people who have greed, I can assure you, will also have fear. So most likely at the first sign of market turbulence, you're going to see some panic, okay? And they just don't have what I call long-term tahanability, right? Fear and greed is just driving their behavior. And right now, I can already see a disaster is coming. So why is there such a big greed? Well, this greed cycle is because prices are rising, and then there's a lot of fear of missing out. So a lot of people chase bulls right now. So a lot of the winners are being chased, and that causes the winner go up. Just think about it right now. No, everybody is now chasing gold. Everybody is now chasing this whole stock market. Everybody is chasing OCBC, DBS, maybe less of UOB whatsoever, and everybody just committing a whole ton of money into it. And well, at times comes the market will turn. I can assure you for sure the market will turn. But everybody would just believe that they are going to be okay because just before the market turn, they will sell. How do you know when that day will come? And when suddenly the market turns, okay, they just get paralysis because they think that market will go back again and just go down, 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 down. And one day they realize, wow, I cannot tahan anymore. And they sell right at the bottom, okay? And that destroys wealth. And after they sell, the market goes up and they miss the whole boat. Well, this happens to many, many people. I've seen this again and again and again. So I would rather you not make money at all. I think short-term gains are the most dangerous thing, right? People will make small short-term gains and basically they make money over 3 to 6 months, even 1 year, maybe a bit more. And they feel that, wow, I can conquer Mount Everest, okay? I'll just say this, I'll rather you lose money and the result force you to learn and try to humble yourself and understand and pick up all the fundamentals and basis of investment. But because you make some money, then early success is the worst kind of teacher, and that's where I've seen so many people pierce themselves with many griefs in time to come. Well, if you want me to share the frank truth, this is going to be hard on you guys. Okay, in the long term, there are only two types of investors that make money, and they are very small group. The first type are investors that are really very good. Okay, really very good. They know how to win in the stock market, and they've got themselves tested over 20, 30 years with a winning formula. They know how to do it. These are people who are pretty good in stock market. I would say expert investors. The other type of winners are people who don't know anything. To be frank, most of them kept themselves out of the stock market, but they put into very safe harbor assets, maybe money market fund, largely into the CPF, especially a special account, and later the retirement account, all make 4%, and it compounds powerfully, and they still make a lot of money. So who are the people who lose in the stock market? The people who know something but not know enough. Okay, they either know a bit or some, but not know enough. This group of people overestimate their ability and get themselves overconfident, and as a result, when the storm comes, they'll be destroyed painfully and terribly. I've seen this big group of people being destroyed again and again and again, and like to give a warning. If you know you're in this group, you really got to do something about it. Why is this some knowledge group the most dangerous zone, right? Those people who don't know anything, they kept themselves out of it. They put themselves in the safe asset, they make money. Then the group that know a lot, they'll make money. But this big group that knows something is the one that loses the most money. Because they only know surface idea, they're blind to what can happen, and they got this incredible, insane love for stock picking. Especially, they love to pick individual stocks. And when you pick individual stocks, it's very difficult to have a long term strategy. And when there are major drawdown, they just unprepared. They're just unprepared, and they just get caught in this very painful downturn, and they react wrongly. So now for the zero knowledge investors, a lot of them just rely on the CPF. CPF ordinary account gives you 2.5%. The special account later become retirement account. Both of them make 4 to 6% return. That's a very powerful return, and a graph will go like this. Okay, and that's okay. That's enough to make a lot of money. I teach people how to make money in this area for the last 10 years already. So this group of money, they know they can't handle, they humble themselves, say, I'm staying out of the stock market. I'll just use a simple 4% return. And that makes a lot of money. Now, let me emphasize again that the CPF returns are not low. For those smart ass that think that I can beat the CPF return, Mr. Lu, which I think I'm quite a good investor, I don't think I can beat the CPF returns. So you have to be really very good to beat Mr. Lu kind of returns. So the CPF retirement account and the special account gives you guaranteed compounding over decades without market risk. And these are things that give you longevity protection once it turns into CPF life. I've taught many people you can make $7, $8, $9, $10,000 for retirement without taking any risk just by counting on CPF, right? And this I teach people in my courses, but I just want to say that it can be done, but for those people who deviate and think that they can outdo the CPF, wow, then they pierce themselves with many griefs. Stock investment is a sophisticated skill. There's a lot of things you need to learn how to do it. There is drawdown, there's a lot of volatility, and there's a lot of emotions at play and time horizon. And there's a high chance you get burned if you don't master the skills. So this is a golden rule that a lot of people should abide to, but they ignore it, is this. Never use money that you need to chase money that you don't need. So this is the single biggest error that investors were to make, right? So in Chinese they say 用需要的钱来追不需要的钱. So this is a very important thing. Never use money that you need to chase money that you don't need. This is especially true for people who are middle aged and to near retirement age. You don't have a chance to turn around anymore. Why risk it? So when do you absolutely have to avoid stocks? Well, when you need the money in 3 to 5 years, okay? The stock market can stay down longer than you can stay solvent. So you can't. If you cannot afford to lose, you can't sleep well at night the minute you lose money, then don't touch the stock market. Yeah, be prepared for a 20, 30, maybe even 40% downturn. And you feel that if that kind of downturn will lead you to unable to sleep, then stay away from the stock market. And if amount of money that you invest in the market is your only money that you need for emergency fund, house deposit, retirement funds, whatsoever, do not put it into the stock market. You'll get yourself killed. So if you don't understand, don't invest, right? Don't understand, don't invest. It cannot be just because Mr. Lu says so, Warren Buffett says so, Charlie Munger says so, Adam Khoo says so, I don't know, some experts say so, and you just dive blindly into it, right? So it's something that you got to realize that some people can make money of it, doesn't mean you can make money of it. So final comment is, if you're not good in investment, it's okay. Don't touch stocks. You'll still be fine. Just use your CPF very well and can still make really good money out of it. Wealth is built by a lot of discipline, a lot of knowledge and mastery. So sometimes doing nothing beats doing something badly. So it's very important that you really get yourself into a position to understand where you belong to. Thank you for watching. I'll see you in the next video or the live stream. Bye bye.